This is Steve Laffey's Fixing America. And now, broadcasting live from the Fixing America Command Center in Fort Collins, Colorado, here is your host, Steve Laffey.
Hello, America. Steve Laffey here. Laffey's Fixing America. It's great to be with you. It's a Wednesday afternoon, 3 o'clock Eastern time when we come on live. Makes me always think I got to be in this chair about an hour early and put on the right clothes, I guess, and get ready. It's another incredibly good day outside, and I got to get out there after the show. I've just been so much inside. I spent a lot of time getting ready for the show. We're talking about the Federal Reserve. We're talking about Janet Yellen, and it's always been a fascinating thing to me. This thing went so awry, and how we as Americans have allowed 12, 19 people to take such a great control of the United States economy. The biggest economy in the world, the most vibrant economy still in the world, even with this putrid growth that we've had the last 5 years. We'll talk about that. And what sort of effect the Federal Reserve has on our lives, how it's been mostly a negative effect in the last 5 years, the last 20 years maybe. How much power we have allowed these people to get, and how much now we have relied on them, to the extent that our fiscal policy makers, the people in Congress, literally do nothing. They do nothing but things that hurt the economy, but they're just looking over at the Federal Reserve and saying, bail us out. You can take care of it. And so when we have bad monetary policy, bad fiscal policy, is there any wonder why 5 years after the last recession, which was a financial recession, wasn't a structural recession, and almost all the time when you come out of a financial recession, what was the 1870s or 2009, you expect faster growth. Usually these things bounce out with 5, 6, 7% GDP growth, much more jobs being created. And since that hasn't happened, we don't even stop, except for very few people, we don't even stop and say, what are they talking about? Why are they still doing this? You know, before we even get to Janet Yellen talking about the Fed and where are we with the Fed? You know, I just grabbed some statistics we can just go over. Because the Fed's balance sheet, and I know, listen, I'm not a Fed governor. I spent a long time in finance. And now the Fed governors all want to think what they're doing is normal. And the papers want to think it's normal. But just to stop and say, what does the Fed's balance sheet look like? Well, today, it's over $3.6 trillion. Of that, $2 trillion is U.S. Treasuries. $1.3 trillion is mortgage-backed security, just buying mortgages. It's a lot of other stuff. Those are the two major things. Federal agency debt security, $64 billion and so forth. But they never used to have any of this. The Fed's balance sheet has exploded over the last 5 years. It's exploded over to something we've never tried before. Never tried. I mean, there's always been this policy. It goes way back. I think it was 77. They started talking about they're gonna both do money supply and do full employment. And they're going to take a really serious look at this thing called the Phillips curve. And, of course, the Phillips curve has been discredited by many people. It's what I learned in college, though, even in 1980, that there was this trade-off, always this trade-off between unemployment and inflation. And basically the theory goes like this, that, you know, if you laid off a lot of people, inflation would go down because they wouldn't be able to demand a lot of wages, right? So if everybody's working, unemployment gets down to what we call full employment, because basically once you get below 5% unemployment, you know, people change jobs all the time. So they're unemployed for a little while. They may be unemployed, you know, tactically. You know, they got another job lined up 3 months from now. They go out, they take unemployment. Someone calls on the phone and say, yeah, I'm unemployed. 5% is basically full employment. There's going to be 5% of the people saying they're unemployed all the time. Today we're at 7.3%, down from 9, up from whatever it was. And but the Phillips curve, of course, we went through the 1970s where we had both high inflation and high unemployment. And so it didn't work out. The Phillips curve was sort of discredited, but they still used that in terms of talking about the Fed's mandates. You know, they've got to keep inflation now. They have a target now at the Fed of 2% inflation. Why is it not zero? I don't know. Good. They think a little inflation is fine. For some people, that may be a good thought, but inflation is one of the things that destroys economies. If you go back to the 70s, we've never had in this country hyperinflation, but look down in Argentina. Look down at Argentina every 7 years, I guess, and see how it destroys their economy. Look what's happened in Venezuela today, destroying their economy. Hopefully we'll take down their leader. Look at the Weimar Republic back in Germany before Adolf Hitler came in. We go on all day about what inflation does, destroys the value of the currency and makes people have very, very take uneconomic actions to protect their wealth. So that's inflation for you, and that's what they're not worried about it today at the Fed. And so you bring in look back over time, and now to talk about Janet Yellen. The reason we're doing this show is just because we want to talk about the Fed. But Janet Yellen's been nominated by Barack Obama, who thinks the Fed does a great job, just a tremendous job, all the time. And so who's Janet Yellen? That's really the question we want to with here. Janet Yellen is somebody. Well, in fact, boss, let's see what David Stockman, former budget director, he has some thoughts on Janet Yellen, who she is and what she's all about. Play clip 7, if you would, boss.
I think it's very sharp.
How do you back that up?
I back that up because she spent her whole life as a monetary bureaucrat in the Fed system, has no clue what honest capitalism, what genuine free markets are about, believes that the entire system has to be run by a monetary politburo, turning all the dials, the short-term interest rates, the yield curve, and the entire financial system.
So you say she's been trained within the Fed, and she's only going to continue.
Part of the groupthink. She's part of the Keynesian consensus that 12 people are running a $16 trillion economy. They're delusional. The market is simply trading the word clouds and the daily injections that come from this out-of-control central bank.
That's David Stockman, great guy. Almost wish he was running the Fed, but I guess he's never going to get the chance. And talking about the groupthink and about the fact that he's against her in one respects because it's the same old thing that's going to keep happening. They're going to keep expanding the Fed's balance sheet. They're going to keep putting us at great risk. But to specifically who Janet Yellen, he's right about this point. She's basically spent his whole life in academics, was a Fed governor from 94 to 97. Then she went to the private sector. No, she didn't go to the private sector. She was Bill Clinton's chief economist. Then she went to the private sector. Nope, she didn't. She was the president of San Francisco Fed from 2004 to 2010. And then she went to the private sector to get some real work. No. Then she went to Washington to be Bernanke's top deputy. She's the vice chairman of the Federal Reserve. So that, by the way, is her selling point. That's what the stock market wants now. They want the easy money to propel stocks up, to get everybody into the stock market. Everybody who thought they were saving for retirement is watch the stock market go up. The guys in the stock market, the people who make money off of it, that's who the Fed's really reporting to. And that's the story we want to tell today before we get to some of these answers. But the other thing that's incredible is what many people in the press think is Yellen's challenge. Now, Stockman, myself, others would say the real challenge is how are you going to undo something that's so large? I just gave you $3.6 trillion. If you're propping up the bond market, and you've been doing it for years, and not just, by the way, the normal Fed operation is to do something with short-term interest rates. And that's a whole other discussion. That's the plain vanilla Fed, that they would raise short-term interest rates when the economy got so hot. I think it goes back to 1950-something where the Fed chairman said we're going to take away the punch bowl just as the party gets going. Some phrase like that. It's a famous phrase from the Fed. And so what they do is that they do control short-term interest rates. So they raise them, and when they raise them above long-term interest rates, well, that's a tough situation for people to make money, right? It's a tough situation to loan. So loans slow down. Banks don't make many loans. They don't. You don't put the money at the bank at 6% for 3-month money, and they loan it out to a car dealership at 4%. Kind of a bad way. They go out of business. So loans start. So they raise it above the long-term rates when they can to slow things down, and they put them down sharply. They put them down basically to zero. But in this economic situation, they went beyond zero. They went to buying bonds and buying mortgage-backed securities, and then that was something that's never been done in the history of the Fed. And the Fed governors, like Fed Governor Bullard over St. Louis, he calls it normal last week. But the papers today, they do a lot with what is Yellen's challenge. They skip over this whole thing about buying $85 billion a month. And folks, it's $1 billion per month. It's nearly $1 trillion per year. When they stopped it after QE1, quantitative easing 1, the market, that seeing it wasn't going to happen again, went down 15%. And everybody looked around and said, oh no, we're killing this thing called the wealth effect. And we're going to get specifically into this wealth effect. We're killing the wealthy people in this trickle-down theory. And we've got to get the stock market back up because that's really what we're focused on. Because we've got to get it up. That's all their focus is. Their focus is the market now. And so they did. They started QE2, quantitative easing 2, and now quantitative easing to infinity. Sounds like the children's movie. But this is yesterday's main biggest business paper, the Wall Street Journal. And in the paper is Yellen's challenge is corralling Fed's many voices. Not fiscal, not monetary policy, not getting out of this disaster we're in. First paragraph, one of Janet Yellen's biggest challenges, if confirmed as the Federal Reserve's next leader, will be managing the Fed's fractious internal debates. By the way, I go 7 paragraphs over. Mr. Bernanke worked hard behind the scenes to get as many votes at policy meetings as possible. He rarely faced more than 1 or 2 formal dissents on Fed decisions. So here's a whole article that never mentions the big elephant in the room, getting out of these disastrous policies. It blows your mind and there'll be questions from certain senators about her policies when she gets in front of them. But most of them, I don't think they understand Fed policy. And most of them, I think, are just saying, wow, if they started reversing this, everybody would look at us. The Fed went back to a normal situation. Everybody looking at their legislatures. Right now, we allow the Fed to take care of fiscal policy. De facto. I mean, it's supposed to be taking care of monetary policy. And of course, the Fed has these 2 mandates, these dual mandates. One is full employment, the other one's inflation. And really what that really came down to in 77 was sort of like if we get conservatives, I guess, on the Fed, they'll be talking about inflation. And if we get liberals on, they'll be talking about full employment. And so either way, both parties, I guess, the little tap dance they're doing, both parties can be happy with that, where the Fed absolutely has to be involved in fighting inflation. And all they really have to do is keep the money supply going at some rate, some small rate, watching what we call MV, money supply times the velocity money, how many times it turns over, equals, by tautology, PQ, which is really gross domestic product. And that's what they should be focused on. But they're not. They're not focused on it. And Yellen is a bureaucrat who's coming in to just continue the policies because now there's no way out. It's a Bernie Madoff situation. It's gone back to probably, and we'll get into it right after the break, from 87 really, in the first stock market crash, and I was on Wall Street then as a young trader. We'll talk about it right after the break. All the way to today, it's turned into a situation that they can't get out of. It just keeps getting bigger, and it's going to lead to total disaster, I think, or a big disaster for the American public. Anyway, Steve Laffey. Steve Laffey's Fixing America. Follow us on Facebook at Laffey Radio. We're LaffeyRadio.com, Laffey Radio on Twitter, Laffey Radio, Laffey Radio. We're going to take a quick break, come back to the clip, and start this discussion of the wealth effect. Be right back.
Stay tuned. Steve Laffey's Fixing America returns after commercial messages. Fair tax, flat tax, 999. What does it all mean? Never has there been more discussion about scrapping our broken tax code than today in America, yet nothing changes. How can Americans want a new tax system while Washington once again ignores the electorate? Laffey has had enough. Scrap the whole system and start over. Find out how this Thursday at 3 p.m. only on Steve Laffey's Fixing America.
The call to serve It has no sound, yet I have heard it in the whispered retelling of honorable sacrifices made by those who have served before me. The call to serve has no form, yet I have clearly seen it. In the eyes of men and women infinitely more courageous and more driven than most. The call to serve has no weight, yet I have held it in my hands. I will commit to carry it close to my heart until my country is safe and the anguish of those less fortunate has been soothed. The call to serve is at once invisible and always present. And for those who choose to answer the call, for their country, for their fellow man, for themselves, it is the most powerful force on earth. America's Navy, a global force for good.
It's 6:42 p.m. Time for Steve Plotto and his son Dylan to do the dishes. They talk about everything from the yuckiness of girls to the awesomeness of his soccer team. Sometimes they don't talk at all. Then, hey! The dreaded splash fight. It's Dad o'clock, and it's the best time of the day. Because the smallest moments can have the biggest impact on a child's life. Take time to be a dad today. Call 877-4DAD-411 or visit fatherhood.gov. Brought to you by the U.S. Department of Health and Human Services and the Ad Council.
When I have an asthma attack, I feel scared. It's like tiny nails in the air poke my lungs. I start to cough. Sometimes my parents have to take me to the hospital.
Today, 1 out of 13 children suffer from some form of asthma, accounting for nearly 1/3 of all emergency room visits.
I feel like I'm choking. It's kind of like an elephant is on my chest. A little whistle sound comes out when I breathe.
But while your child may suffer from asthma, asthma doesn't have to make your child suffer. There are simple ways you can prevent your child's next attack. To learn more, log on to www.noattacks.org or call your doctor, because even one attack is one too many.
I feel like a fish with no water.
Brought to you by the EPA, the Ad Council, and this station.
And now, back to the Fixing America radio program with your host, Steve Laffey.
I think we're settling into the end game of this whole misbegotten spree of QE and ZERP and massive manipulation of the financial markets. We're going to basically replace Bubbles Ben with Calamity Jen. I think she has because she has no clue how to wean Wall Street from its pathetic addiction to this massive stimulus, easy money that's been going on for this entire century.
David, that's a shark.
Steve Laffey here. Steve Laffey, Fixing America. Thanks for listening to the show. Thanks for watching the show live at LaffeyRadio.com, 3 o'clock Eastern time. I'm in Mountain Time, 1 o'clock Mountain Time. And then we put it right up into the sky so you can just on demand. So if you like the show, you can tell your friends about it. And many people are doing that. Tell them to go to LaffeyRadio.com. A lot of things we do. We do things every day. We got a bunch of different things we put up on the website. We got a Laffey Minute. Put one up every day of the week, Monday through Friday. And that's just me out there in the street sometimes, out with my cows, and something comes to me, and that I think everybody's thinking. And I go and I just tape it. It's a minute and a half long, and you can pass those around. Put them on your Facebook pages, and that's what we do. The Fixing America Presents, a little more upscale, a little more background. We just put up a new one every Wednesday. We put one up in the morning. So we've got a lot of different things that we can put up with Laffey Buzz. That's really the blog. We appreciate your comments. Had a great comment from a lady named Robin today on the Facebook site, talking about what I was putting up there about how, and we're going to do more shows on this, how older people, and we love them, love our parents, but they're taking out a lot more than they're putting in. Whereas the younger people, the younger you get to zero, they're on the hook for hundreds of $1,000s, and the debt is so big that they're not going to be able to pay it back. And these things are going to come and whack against each other. And that brings us back into this discussion of the Fed, because it's been a giant problem. And you just heard David Stockman, who is a congressman out of Michigan, became Reagan's budget advisor, budget director, really knew the numbers, left that, and really, he's just, I think there's a lot of angry people who really know. And what do you do about the people who really know? Because one of the things that Stockman says in that clip, that people don't know their way out of the situation. The Fed's balance sheet, which we discussed, is over $3.6 trillion, up from, I don't know, they always have a balance sheet of a couple $100 billion, I suppose, because they're doing things in the short-term markets, buying, selling, and so forth. And that's not even, we're not even going to go back to that. We're not talking about a show about ending the Fed. It's not a show about auditing the Fed, which would be a great idea. It's not about where the gold is. It's like, we're not even getting back to like, well, those are the normal questions people would ask. We're really just sitting here saying, how did this happen? And how is Janet Yellen going to do anything but continue on what she's doing? Because the reason that people want in most of the articles that she is the insider. It's so complicated, people say. It's so non-understandable that only she can be involved. And so we have 12, 19 people, whatever it is, in charge of a $16 trillion economy where their power far outweighs, in many respects, the President of the United States. So how did we get here? Well, and I mentioned it the last clip. Let's go back to the Federal Reserve. Let's go back to 1987. It was a seminal year for the Federal Reserve. Alan Greenspan, Reagan appointed Alan Greenspan. Reagan, and I don't know this for a fact, but Reagan believed in the hard money. We were off the gold standard back in the early 70s. And I forget where Reagan was in that. I imagine he was a gold standard guy, So he puts on a guy who was a gold standard guy, we call him a hard money guy. A guy who wanted to defend the value of the U.S. dollar. Alan Greenspan, who'd been a disciple, it may be a strong word, but a follower of Ayn Rand, the lady who wrote Atlas Shrugged. In fact, there's a book called Capitalism, the Unknown Ideal. And in that series of essays, which I've read many years ago, there's an essay by Alan Greenspan defending the gold standard. So that's like what Reagan thinks he's appointing. So he becomes sometime in early, I think, 87. I just have joined Wall Street, April of 87. Well, rates start rising over the summer. The market still keeps going up. There's a stock market crash. Everybody thought the world, oh my gosh, the crash hadn't happened since the 30s. This was the next stock market crash. And that's when Alan Greenspan changed the whole shooting match. That's when he became a believer in the wealth effect, that somehow he had to get involved, which he did. And the Fed flooded the economy with easy money for a relatively short period of time, nothing to the extent that we did today. And here's the important point. He got away with it. In other words, people didn't see Alan Greenspan as a turncoat at that day. They didn't see him as someone who just became went from being a conservative guy to being a liberal guy. They just thought it was a one-off thing. And when it worked, the stock market went back up. The recession that people talked about, that maybe or maybe wouldn't happen, was sort of averted in a way. It wasn't as bad as people thought it was. Well, then two things came true. One, Greenspan changed his way. He got lots of power. He was Alan Greenspan. He became one of the most powerful. His power kept growing. So he became sort of like what FDR did back in the 30s. FDR would get up in the morning and he'd play around in bed a little bit and set the price of gold. He'd be sitting there in bed saying, I think gold should be up $3 today. They're making $33 an ounce, whatever it was, right? And Greenspan started doing that. Now, Greenspan's background, of course, is just analyzing. He had a consulting firm where he was one of the brilliant idea. He got this information early, back before all the internet and everything. He would get it early, and he would advise companies, and he'd be right a lot because he had a lot of good information. He'd get it quicker than other people and he had a consulting firm. But then Greenspan just kept doing this. And it went on. There was a Mexican debt crisis in 1994, and he came in and bailed out the banks. Now, these were relatively $20 billion, relatively small things. But then it happened. There was a situation in the late 90s as long-term capital. And if you don't know the story of long-term capital, I just got to go into it quickly because it's very important to know how we got to where we are and how we got to be the Bernie Madoff situation where, and I say that, by the way, because what happened to Bernie Madoff undoubtedly was he had a real firm and he had a bad year. And when he had a bad year, he couldn't admit to having a bad year. So he made the numbers, and he figured he'd make it back. That's the way all these things start. He figured he'd make it back. And he never did. And so it just kept bigger and bigger. And then at some point, Bernie Madoff said, I guess I can never tell anybody. And now he's in federal prison, and his brother people killed themselves and so forth, his son or whatever, which is a terrible situation. People lost billions and billions of dollars. That's what's happened here, because we turned into deciding that the wealth effect was one of the most important things. That means, in other words, keeping people wealthy. And then when long-term capital came around, long-term capital was a guy named Meriwether, who was at Salomon Brothers, and a guy who had won a Nobel Prize in economics, the Black-Scholes model, the option market. And his name was Scholes. It wasn't Black, it was Scholes, I think. So those two guys and another guy, they get together, they got like 100 employees. They leverage up 30 to 1, their little bit of arbitrage. And they're doing the opposite of what I was always told as a trader, which was like eat like an elephant and, I can't really say it, but go to the bathroom like an ant. And they did the opposite. They ate like ants, took a little bit of little money, but they left themselves open when the Russian economy collapsed. They left themselves open to being wiped out, and they were wiped out. Fine. Greenspan stepped in. This company with 200 employees, he was worried for some reason that it would wipe out the U.S. economy. So he stepped in, got in a room with banks, precursor to Paulson, later on the Secretary-Treasurer, and told them they had to take this deal. They had to bail out this hedge fund operating out of Greenwich, Connecticut, with all these rich guys. And then it turned into too big to fail. And along the way, that's what's happened. So we could go through story after story, into 2008, where the banks were too big to fail. The Federal Reserve had to engineer something. We had to get money into the banks, and many of them were foreign banks. We had to save Goldman Sachs, because everybody in the government, I guess, worked at Goldman Sachs, Hank Paulson and so forth. So we got into too big to fail. And now here we are. And there's no doubt about it, this wealth effect angle. I mean, take a look at what's the results. The results are that we have a greater disparity of wealth. Why? Because to save everybody in the stock market, most people aren't in the stock market. Who are we punishing right now with these low rates? We're punishing savers. We're punishing 63-year-old people who are trying to save for their retirement and don't want to get back involved in the stock market, but feel like they have to because their broker's talking about the 7% preferreds and so forth, and on and on and on. And so that's what really happened. That's how the wealth effect became the too big to fail. That's our history lesson. And so here we are today where we've got a situation that nobody, and I scour, Stockman doesn't know how we're going to get out of it. Former Federal Reserve governors don't know how we're going to get out of the situation we're in. No one knows how to unwind this, because when the Fed made its first move into unwinding, which was QE1, remember, they went all the way to zero interest rates. That wasn't enough. And so you have to ask yourself this question, because we've got some statistics here that I wanted to just go through with you. You would think in the private sector that if we had a recession and it was the worst recovery of all time, where we are 10 million jobs below normal, and if it had been an average recovery from 2009 to today, last 4 years, we'd have 10 million more jobs. We have the weakest economic recovery on record. The per capita inflation adjusted GDP is 12% below pre-recession trends. We haven't made that up. And the adult working population is down from 59.4 in 2009 to 58.6. It should be up. So it's failed. And so maybe there's another situation that's going on. Maybe it's all the other stuff we've done. But yet we look to the Fed and now Janet Yellen as the savior for this. Steve Laffey here. Steve Laffey's Fixing America. We're going to take another quick break and come back and discuss what we hear about the Fed. Steve Laffey, LaffeyRadio.com. Tune us in. We'll be right back.
Stay tuned. Steve Laffey's Fixing America returns after these commercial messages.
I'm in almost every school bus and classroom. I go to school with your children. We made a Pledge of Allegiance together. You see me around the neighborhood, they tell me that I'm a pretty good kid.
We know that the Fed couldn't stop quantitative easing one. They couldn't stop it. They went because the stock market went down 15% in a very short period of time. So they had to go back and do QE2 and now QE3. So Janet Yellen's not the person to stop this. Now, you could always be wrong, by the way. I mean, I guess Janet Yellen could wake up and say, oh my gosh, we got to get this thing done. Or she could just put in some simple rules. I'm going to take down this QE2 by $5 billion per month. We'll buy 80 next month. We'll buy 75 the month after 70. It's still, the Fed's balance sheet is still exploding. But at least it's something, And so that's the way we've got to do it. We got to do something. But one thing I do know from my time in economics and business and so forth and my study of this is that there are long lead times between what actions are taken and then when things show up on balance sheets or economic growth and so forth. So we know we don't have a situation like Germany in the 1930s where the money just really, the printing of money just went literally into people's hands. Right now, the money goes into banks. The money really actually goes back to the Fed in many respects because they can't lend it out because the Fed pays them not to lend it out, not to get into that whole subject, but to keep reserves at the Fed. So the Fed knows that if they started lending it out, we would have inflation. So by their very nature, the Fed has made it so that there is really no way out. But if we're going to have inflation, and inflation is coming, and I always kind of think of things, let's go back to the normal. What's the normal? Well, normal we're going to have 3% inflation. Well, is the Fed really going to stop this program? Are we worried about targeting 2% when it's running at 3%? Or are we going to get what we call behind the curve? But there's long lead times between monetary interventions and results. And we don't know when the inflation's coming. And it gets at that other rule. Why would we take the risk? Why would we take the risk of having this happen? Who's really going to be the person to come in? If you look back into 1970, it was actually Jimmy Carter who put in Paul Volcker. I don't know if Jimmy Carter knew what Paul Volcker was going to do, but he slammed us into 2 recessions. He slammed on the brakes. And at some point, he basically cost Carter the election. If there's anything that cost the election besides Iran and so forth, it was Paul Volcker slamming the brakes on the money supply. But Paul Volcker knew things were getting out of control. How are we going to do it with all this? Doesn't seem to be a good way. So here's my question. Why do we continue to think that the effect of Fed policy is actually helping? It doesn't seem to be helping. Statistics are that we have this. Why wouldn't we, after 4 years of doing this, wouldn't there be a meeting of the minds to say, hey, this hasn't been working? And then say to ourselves, well, then what could have been the problem? And I just wrote down, I was just typing today. I haven't done this for the show. I was just typing today all the things I could think of. Let's take so we went over this in the last break. Since the recession ended in 2009, just to repeat it, it's been the weakest economic recovery on record. We're 10 million jobs below normal. All this during a financial crisis. And in a financial crisis, you're supposed to recover quicker and stronger rather than a structural problem. And adult working population has actually declined in this recovery when it should be going up. Well, let's look at other things we've done. There's probably 20 of these things. I just wrote down about 10 of them. What if it's some of the other policies that are affecting the way Americans are viewing job creation, how they can create jobs, how they can move to other jobs? What if there's something else totally going on? The Fed policy, let's say at best it's been neutral, but it hasn't been helpful. Look what we did. Put new banking laws. Dodd-Frank is the name of the law. Much more regulations. It was supposed to, by the way, be attacking big banks. It's actually rewarding bigger banks. Makes it harder for them to lend, though. The banks are bigger than they've ever been, and it's more costly for the banks to do business. And the law picks big banks over small banks. So small banks are struggling even more. How is that regulation helping America? We've already had a show on the banks, and we're not going to go back and revisit it. Why don't we make the banks smaller? Why don't we simplify the process? Get rid of a lot of these regulations. That's one thing. But look at the silly things we've done. How do people plan their lives when the government from month to month comes up with a new plan like cash for clunkers, Do you remember cash for clunkers? I'll tell you a story. I actually bought this was 2009. I bought a truck. When I bought this Ford Made in America. We'll do a show. I got to do a show on that soon. How to buy things made in America. But I bought a Ford pickup truck, special edition for way below invoice. Someone ended up sending me a check. Like, I got a check for another $1,000. And during this I think it was just a mistake. Dealership was kind of going out of business. They just sent me an extra $1,000. This is like 2 months later. But cash for clunkers, what did that do? Beef up auto sales for a month, 2 months, 3, whatever it was, and then take them down? What about the government bailout of General Motors? Now, this is where, during the presidential election, Romney got in trouble because he wasn't for the bail. But when we abrogate, when we do away with the rule of law, this is 2008, 2009. It goes through 2009. We put in a car czar, Stephen Ratner, and we tell the bondholders, sorry, we're just not going to follow the law here. We're going to make sure the unions get their money. They're going to get ownership, and the government takes another stake. How do people feel about capital formation in our country? Feel like it's a good thing? People will respect the rule of law? What about when we extend unemployment benefits for 2 years? What does that mean? Well, we're going to take a quick break here. Take one more break, come back and finish up this story. Play a lot more clips. I'm sorry, I've just been on a roll here. But I believe that it's a situation that a lot of other things have been going on that have been hurting the American economy, and we've got to go focus on that and not give the power to the Fed and ignore our responsibilities. Steve Laffey's Fixing America. We'll be right back for one more break.
Stay tuned. Steve Laffey's Fixing America returns after these commercial messages.
I am an American soldier.
I'm a warrior and a member of a team.
I serve the people of the United States and live the Army values.
I will always place this first.
I will never accept defeat.
I will never accept defeat.
I will never quit.
I will never leave a fallen comrade.
I am disciplined.
I am disciplined.
Physically and mentally tough.
Trained and proficient in my warrior tasks and drills.
I always maintain my arms, my equipment, and myself.
I am an expert and I am a professional.
I stand ready to deploy, engage, and destroy the
enemies of the United States of America in close combat.
I am a guardian of freedom and the American way of life.
I am an American soldier.
I am an American soldier.
I am an American soldier.
There's strong, and there's Army Strong. See what it takes at GoArmy.com.
Ranger Station, Ranger speaking.
Hi. I'd like to report a bear hug.
Okay.
Well, before I left my campsite, I was putting out my fire, and out of nowhere, Smokey Bear showed up and hugged me?
So you drowned the fire, you stirred it, drowned it again, and felt that it was cold?
Uh-huh.
Oh, yeah. He likes it when people correctly put out their campfires. He's pretty big on wildfire prevention. He's just letting you know you did good with a hug. He's a hugger.
I just got a bear hug from Smokey Bear. Status update!
All right, I'm going to let you go now. I've got a lot of ranger stuff to do. There are many ways to start a fire, but one sure way to put it out. Learn how you can do your part at SmokeyBear.com.
Only you can prevent wildfires.
Sponsored by the U.S. Forest Service, Ad Council, and your state forester.
Students, when I call the reason for your absences throughout the years, please exit the auditorium without your high school diploma. Too tired. Family trip. Sick day. Starting the holidays early.
Starting in the 6th grade, students who miss 18 days or more of school in a year for any reason will fall behind and risk not graduating high school. How many days of school has your child missed this year? Absences add up. Keep track at boostattendance.org. Brought to you by the U.S. Army and the Ad Council.
Fair tax, flat tax, 999. What does it all mean? Never has there been more discussion about scrapping our broken tax code than today in America, yet nothing changes. How can so many Americans want a new tax system while Washington once again ignores the electorate? Laffey has had enough. Scrap the whole system and start over. Find out how this Thursday at 3 p.m. only on Steve Laffey's Fixing America. And now, back to the Fixing America radio program with your host, Steve Laffey.
I don't think she wants to end the Fed as you've said you want to. Where is the line? Do you really want them audited, or do you want that as a precursor to their destruction?
Well, I don't want to destroy anything. I want to repeal bad laws and bad monetary policy, and my idea is that the Fed will self-destruct. They'll lose its efficiency when the dollar goes down and there's no longer a reserve currency of the world, and that's what we're working very hard on.
That's Ron Paul, who I mean, in this kind of policy, I have great respect for him. One of those guys. I mean, on foreign policy, and him and his son, I really don't know where they're coming from sometimes. But on fiscal policy, on the Fed, his last line there is that we're working hard on taking the dollar down, and that's what people have to understand. We've just allowed like 12, 15 people to control our lives, and they're hurting most middle class people. How's it all worked out with them concentrating on the wealth effect? It looks like the wealthy have got wealthier, and the middle class is taking it on the chin. So why can't we get back to something normal? And so that's a great clip from Ron Paul. He's right on about it. The Fed will self-destruct. Why do we have to wait for self-destruction? I mean, one of the reasons there's not much we're going to be able to do. You know, this is all about solutions. Not much we can do. There's a lot of Republicans who have bought into this whole argument. Look at let's go back. We'll try to play this clip again. This is clip 3, boss. That Things Are Great by Barack Obama.
Over the past 5 years, America has fought its way back from the worst recession since the Great Depression. We passed historic reforms to prevent another crisis and to protect consumers. Over the past 3.5 years, our businesses have created 7.5 million new jobs. Our housing market is rebounding. Manufacturing is growing. The auto industry has come roaring back, and since I took office, we've cut the deficit in half. Now, I think everybody understands we've still got a lot of work to do to rebuild the middle class, but we've made progress, and we shouldn't do anything to threaten that progress. For these hard-won gains have made a difference to millions of Americans, and in part we can thank the extraordinary grit and resilience of the American people. In part we can thank the dynamism of our businesses. But a lot of it also has to do with the choices we've made as a nation to create more jobs and more growth. And one of the most important contributors to this whole process has been the Federal Reserve under the strong leadership of Ben Bernanke.
Under the strong leadership, the Federal Reserve, he's thanking the Federal Reserve, and of course, then it goes back to why did we have that last financial crisis in 2007, 8, 9, whatever? Why did we have it? Wasn't the Federal Reserve, I guess? Where was their strong leadership there? Alan Greenspan said there was no bubble in real estate. He kept rates too low. Everybody tried to make as much. It went on and on and on. People made as much money as they could for the short term because they could take advantage of it, and it led to a total disaster. But here's Barack Obama, loves the Federal Reserve. By the way, cut the deficit in half. What a bald-faced lie. It's like you can keep your health insurance, period. Mr. Period. There's a guy named John Period out there. I guess he can keep it. In fact, I got to play another clip. This is Barack Obama again. I've got to play the second clip right afterwards because he now in this, you'll get a, play clip 4, please, boss, please.
A lot of people aren't necessarily sure what the chairman of the Federal Reserve does, but thanks to this man to the left of me, more families are able to afford their own home. More small businesses are able to get loans to expand and hire workers. More folks can pay their mortgages and their car loans. It's meant more growth and more jobs. And I'd add that with his commitment to greater transparency and clarity, he's also allowed us to better understand the work of the Fed.
They're just thanking Ben Bernanke. He'll be thanking Janet Yellen, and we careen toward a total disaster. And people know it. And that's the thing. We're in a situation where there's not a single great person you can respect says, oh, Steve, here's how we get out of this problem. Ben Bernanke can't tell you. Janet Yellen can't tell you. $3.6 trillion Fed balance sheet growing. They're out buying mortgage-backed securities. They're out buying longer-dated treasuries. By the way, and this, I don't want to get too complicated. I mean, get into the CAPM pricing model and so forth, and how this has affected securities. And so it can get very complicated. But the long-dated treasuries, 5, 10, 30-year treasuries that are outstanding, affect everything in the world because we are the world's reserve currency. When they keep that lower and they keep buying them, the Brazilian market, the Russian market, the third world markets, they do better because everything's priced off of the long-term U.S. bonds. That's sort of the risk-free model that we look at. And when they keep it down to zero and then add this in to make it negative, well, the returns on stocks are supposed to be higher and people stop piling into stocks. But I want to get back to what I was talking about the last week because I don't want this whole show is going to end, and I'm only about halfway through what I want to talk about. But there's a lot of other things that have happened since 2009. We get the home buyer's tax credit of $7,500. What did that do? Got people who into a house maybe on the margin, and then housing starts dropped, and of course they went up again because the Fed had to do something else to keep it going. Remember, we're into this Bernie Madoff situation. We've made bad decisions, and now the people who run the Fed don't have a way out. They can't level with the American people. And I'd like to ask this other question. If and when it all blows up, who takes the responsibility? Think they're going to go put Alan Greenspan in handcuffs the way they put Madoff in handcuffs? No. He'll probably have passed away. They're going to do the same thing Bernanke? No. These people just leave. We give them unlimited power in the money supply, unlimited power to stop interfering in the long bonds of the United States market. They shouldn't have that power. And so it's my contention that all the other things we've done, all the lousy fiscal policy, Obamacare could be number one on the list. The American, I wrote down, people don't remember, the American Recovery Reinvestment Act, that was $800 billion. They just wasted it. Did they pave all the roads? Are your roads paved because of that? Is our infrastructure better? You got Wi-Fi across America because of it? No, you don't. They just whipped the money out the window. And so investors in America and American investors are looking at it going, why am I starting a company here? Now, don't get me wrong, people do. But on the margin, what have we done? We've made life so uncertain for business people. We've got lousy tax policies, lousy income tax, and we're going to talk about that tomorrow. We're changing things on a dime. Long-term capital gains, now they're up. And we've got to come to some consensus. This is the long-term policy of America. And one of them will be for the Fed is that we don't give them that much power. We'll take care of unemployment here in America. You take care of the money supply and keep inflation at zero. Thanks. The whole reason that supposedly the Fed was started was to level out business fluctuations, GDP fluctuations. And it hasn't. Clearly hasn't. There was a Great Depression when there was a Fed. Supposedly, some people think maybe it goes back and forth now in history. They contracted the money supply too fast. But there was a Great Depression. So it hasn't worked. None of this has worked. In the last 4 years, I think clearly shows that there's something else going on. And so to sum up this show, there's a lot of questions we should be talking to Janet Yellen about. What do you think about the wealth effect? How come people, if you believe in the wealth effect, how come it hasn't worked? Why is there more disparity of wealth? And why is the middle class shrinking? You've been ahead of the Fed. You've been at the Fed for a long time. What about these other policies that I've talked about? Why do you think QE, quantitative easing, buying long-term bonds and mortgage-backed securities to the tune of, it'll be $4 trillion soon? Why is that normal if you've never done it before? If indeed we have long-term changes when inflation comes when we never see it. By the way, if they saw it coming, that we would never had inflation in this country, right? If we always see the bubbles, like the real estate bubble of the 2007 collapse. If we always saw it, how come we keep having them? So why do we keep giving you the football as the quarterback when we're like 1-7? Anyway, Steve Laffey's Fixing America. Those are the questions that need to be asked. We've got to get someone to appoint a real Fed chair. It won't happen in this election cycle. We're in trouble. But anyway, tune in tomorrow. We're going to be talking about this pertains to this. We need a new tax system so people can have some certainty about what we're doing. So it's Steve Laffey's Fixing America, LaffeyRadio.com. Check us out. Spread some of these smaller Fixing America Presents and Laffey Minutes around. Like us on Facebook and Twitter. Follow us on Twitter, and I know people are starting to do that. And go on, put some comments on Facebook. We'd like to see that. I'd like to answer them on the show from time to time. But anyway, I'm going to sign out for today. Go outside, take care of my daughter, pick her up from school. God bless you. God bless America. Steve Laffey signing out.
You've been listening to Steve Laffey's Fixing America radio program on the Laffey Radio Network. Fixing America is broadcast Monday through Friday afternoons at 3 p.m. right here at www.laffeyradio.com. Any rebroadcast, retransmission, or account of this broadcast without the express written consent of Laffey Network, LLC is prohibited.